Right now, it's a buyer's market when it comes to buying a business. In today's video, I'm going to go over a report that came out analyzing Q1 of 2023 from BizBuySell, and we're going to read between the lines and what that means to you if you're looking to buy a business in 2023. Let's get to it. Everybody, welcome to my channel. I am your host, Leo Landaverde, business broker and commercial lender, helping you buy and scale a profitable business. If you are a small business owner looking to increase your wealth or diversify your wealth by buying a profitable business, or if you're in the rat race trapped as a W-2 employee wanting to get out and buy your own business and become the CEO of your own company, you are in the right place. Please subscribe to my channel. Don't forget to hit the bell. You'll be notified every Thursday when new videos come out.
All right, let's do this. So three things that I want to point out that we're going to go through to talk through this report, which comes out quarterly. And you know what? You can subscribe to BizBuySell, and if you apply for a listing and or somehow you get into their email list, those are good things to read anyway as you're gaining overall knowledge of the business acquisition and M&A industry. So this report says that the closed transactions bounced to 4.8. Sales prices increased 11% after losses in the fourth quarter. So what this means is that there is an uptick, quarter over quarter increase of businesses that have been sold. That's a good thing. That's a good trend. That tells you that the post-COVID, we're starting to recuperate. We're starting to get to some serious activity. The volume, right, has increased 4.8 after several quarter declines, which is actually a good thing. So buyers and sellers are adjusting to new economic conditions, right? And what that means is that the game has changed, right? And this is where I need you to pay attention to read between the lines. What do new economic conditions mean to us, right? To you as a buyer? What it means is that back in 2020, the cost of lending was a lot cheaper than it is today. So sellers could come up with any multiple valuations that they could, and the debt service would be so low that because the debt service would be so low and the debt service coverage ratio as a result of that could actually justify higher valuations, north of 4, 5, 6 times EBITDA or cash flow or seller discretionary earnings. Well, that used to be, that was a frenzy. It was actually help the sellers. Low interest rates help sellers than they do to buyers. They help more the sellers than they do to the buyers. As the interest rates began to climb, began to get higher into the 6, into the 6.75, into the 7.25, as prime began to increase, what happens is that a lot of these deals that were overpriced in 2019 and 2020 could not longer get the debt service coverage ratio acceptable to the lenders of 1.25 or better. So because a lot of these deals were being turned down by SBA lenders, sellers had to either bring the price down and or get some seller finance, be willing to believe enough in the business to have a seller's note, so have a lien against the business, basically carry some of the paper. So we're starting to see more of that, rather than having a 10% down and 90% LTV with an SBA 7A loan, whether variable or fixed. Now we're seeing more like 75% loan, 10% from the seller, and then 10 to 15% carry from the seller. So in a case like this, even depending on how marginal the deal was, if there is not enough cash flow, if they have some blemishes, if there are some concerns from the lender, anywhere from, you can see it as low as 60, 65, 70% LTV, which means that the gap, if you only have 10%, was going to have to be met by someone other than the buyer and the SBA lender, which means that the seller had to step up their game and really stand by their own valuations. Okay, so where things are today, it's a safe bet that if a business is priced properly, around 2.5 to 3.5 times cash flow, most likely will be passing the sniff test from the lenders. So this is important to note. Businesses sold in Q1 2023 reported higher financials. What do you think that means? Okay, let me show you this right here. So the median revenue of 700,000 on businesses sold of the 2,100 or so transactions that transpired in Q1, the average was revenue of 700,000 per year annualized. Based on what the median was 518. So what does it tell you? That sellers are now starting to realize, wait a minute, I need to perform. I need to really manage the business. I need to be profitable. It's not just about the revenue. It's not as how much money you generate as a seller. It is how much you get to keep and how much you can evidence, how much profit you can pass through your tax returns, which are ultimately the litmus tests to get SBA loans. So the median cash flow back in Q1 2017 was 117,000 and is now 155,000. So as the revenue increased, so did the cash flow, which is actually a good thing, right? All of a sudden, we have all the sellers that were having losses in 2017 or marginal gains, and they were able to get whatever price they justify because the credit system with the rates were so low. Now they can get away with doing that. So it's kind of tipping the scales from a seller's market now to a buyer's market. Higher financials is actually a good thing. Higher financials, higher quality of earnings is actually a good thing for everybody. Okay, so it's kind of bringing things into a more of a true market value of a business. So let's read on. Business buyers gain leverage as high acquisition costs put pressure on business values, as I was saying. High acquisition costs. What is the number one acquisition costs when buying a business? It's going to be your loan. It's going to be the cost of the guarantee fee that is going to be factored into the loan. It's going to be your related closing costs, because things are a little higher now. You need to have X amount of loan against the purchase price to be able to make it worth the while for the buyer.
Do you need help when it comes to buying a business? I am actually conducting multiple calls a week with my subscribers from YouTube and really giving them some insight on a complimentary call. If you're stuck somewhere in the process, whether it's due diligence or knowing if you're looking at a good deal or not sure what to say to a broker, let's schedule a time to chat. All you have to do is drop me a comment below or send me an email. My email address is in the description section of this video, and let's chat. Thank you.
With interest rates hikes making acquisitions more costly, many buyers are negotiating what? Lower prices, putting pressure on what? Valuations. So what you see here is that the listing price versus the actual purchase price. The median asking price 375 versus a 350. There's a little gap. Back in 2019, Q2 2019, the median asking price was 299 and versus 270, right? Sales price versus asking price. Now, a lot of what gets sold in BizBuySell is what I call Main Street businesses. These are businesses where the purchase price is less than $1 million. Once the purchase price hits over $1 million and it gets higher into the $2 to $3 million range, now you have a different type of market. Usually business owners who turn into sellers who wanted to sell their business, and if they've been working diligently with their advisors, with their attorneys, with their CPAs, making sure that they're not leaving money on the table by maximizing the value of their business, would have quality earnings, would have more cash flow on higher revenue to justify higher valuations, and they should if they've done a very good job building the brand. I have several businesses in the market that have experienced great growth, as evidenced by lenders being very happy and getting multiple SBA pre-approvals. So, but what you should know is that buyers now appear to have the upper hand in a market where funding becomes less available and more expensive. Okay, so this is and will be for the next 10 years what we call a silver tsunami. You're gonna have all of these owners, 55 plus, started to wanting to retire. Some of them will just want to retire just because they want to spend more time with their family. Some will be burned out. Some will be ill, will have issues. Some of these situations that actually may not be good for the sellers, but are ideal for buyers, because if you have a seller who has been making money hand over fist for 20 years and they want to continue, but they're unable to continue and they have to let go because no heir, no sibling, no child will take over the business. If it is a bona fide reason like that, you have a cash cow that it needs to exchange hands. Hence, we're calling it the silver tsunami. Okay, so that you need to know that nearly 1/3 of business owners are speeding up their exit due to retirement and burnout. Okay, owners are not actively selling due to retirement, stabilization of revenues after COVID, which is, COVID was a big deal. I had a discovery call with a buyer who had questions about a business that they were wanting. She was looking to buy, and it was passionate. It appeared to have the cash flow of $500,000 and a 1.2 million sales price. And we started looking at the quality of earnings. And whenever you have a business that is factoring in the PPP money that came in, and some sellers actually got a windfall of PPP money. On the average, I saw anywhere from $300,000 to $500,000 worth of PPP money that was actually forgivable on the federal side, not so much on the state side. But a lot of the sellers were actually throwing that PPP money up, lumping it in with other revenue, which technically does not belong to the business and needed to be below the line as other income. So whenever you're not discerning enough to separate the PPP or other income from the main revenue, then it's going to skew the numbers. You're going to have situations in which we are overstating the income, and that PPP income, it's not an income that is going to be recurrent, which should not count towards the valuation. Anyway, I have a bone to pick with some of those situations. Business owners say inflation remains challenging, right? I think we're normalizing as one side effect of interest rates continuing to increase is that it puts a stop on the purchasing power of the average consumer, which means it slows down acquisition of just people wanting to buy stuff. So it slows down the economy, as it slows down, the rates continue, will eventually go down. What goes up must come down. Okay, this is cyclical. Seller financing is now playing a bigger role in today's market. So as I said before, in interviewing brokers, and I'm attending a business brokerage conference this week. As I'm taping this, I'm getting ready for a Florida conference, International Business Brokers Association. So this video is actually coming out in May 2023. 70% of business brokers surveyed that feel that seller financing is important in today's market. And it will continue to be important. Now, the true test of a seller who is not able to get SBA financing, pre-approval for SBA loan, is do they believe enough in the business to wanting to offer seller financing, then becoming the bank. I've seen it happen more and more. Anywhere from 10% to 50% the sellers say, you know what, this is a great business, I believe in it, and I'm willing to stand by it, and I'm willing to finance 50% of it. Well, whenever a seller is financing a part of it, it makes it better for the buyer, which means that it should give you confidence in knowing that the seller believes enough to be able to finance it. That's actually a good thing, and it's making the business overall more attractive to the right buyer. We're also seeing higher business valuations, deals on the market. Okay, so I alluded to this earlier. Mainstream businesses that are $1 million purchase price or sales price or less are different than businesses that are doing $3 to $5 million in revenue and $3 to $500,000 in EBITDA. Once you're getting into the higher thresholds, there is more seasoned businesses with more stable cash flow, with more intellectual property, with more standard operating procedures, with more seasoned management, with more of everything, better marketing materials, staying powered in the marketplace, household names in the local marketplaces. That attracts the attention of more seasoned private equity groups, institutional buyers, more discerning investors, those who are doing roll-ups. So there is more competition. The businesses tend to stay a little longer in the marketplace, but they will tend to sell for a higher multiple than the ones that are Main Street or less than $1 million purchase price. So I feel that the business is actually good. This is a good place to be. If you are looking to buy a business, this is the time to do it. Get your house in order. Reach out to me. Let's chat. Let's get you ready so you can put your best foot forward when you're dealing with either off-market deals or on-market deals. They're actually very, very good deals in Biz Buy Sell if you know how to look and where to look and how to do the pre-evaluation. Hopefully these videos were helpful to you guys. Thank you so much for watching.
Limited time, I'm giving away my cash flow calculator. This tool has been downloaded over 1,000 times in the last couple of months. And this is a tool that allows you to take the cash flow from any deal being advertised and figure out what your cash flow would be after calculating debt service based on whatever down payment you have to offer. All you have to do is click on the link below. It's yours to keep as a gift for being my subscriber to YouTube channel. Enjoy.